Welcome back to another exciting update on BitcoinDorks. In today's video, we're going to dissect the recent decision by the Federal Reserve to leave interest rates unchanged. Without further ado, let's delve straight right in. The Federal Reserve, commonly known as the Fed, recently made a pivotal decision by opting to maintain the status quo on interest rates. However, what truly captures our attention and raises intrigue in this announcement is the subtle hint that the future might hold additional interest rate hikes. This subtle nuance has sent ripples of anticipation and speculation through the financial markets and has piqued the curiosity of investors worldwide. It's a reminder that even the slightest shifts in the Fed's stance can send shockwaves through the global economic landscape, and the implications of such decisions extend far beyond traditional markets, profoundly impacting the realm of cryptocurrencies, particularly Bitcoin, BTC. Now, let's dive into how the kingpin of the cryptocurrency world, Bitcoin, BTC, responded to these developments. Bitcoin, often referred to as digital gold, has established itself as a unique asset class, often decoupling from traditional financial markets, but occasionally showing sensitivity to macroeconomic shifts. In the immediate aftermath of the Federal Reserve's announcement, cryptocurrency enthusiasts and analysts around the globe held their breath in anticipation. The price action in the Bitcoin market over the hours and days that followed provided intriguing insights. Some observed initial fluctuations, a knee-jerk reaction to the Fed's statements, which is a common occurrence in the crypto world. Market participants were keenly scrutinizing every candlestick on the charts, dissecting every buy and sell order, and assessing the volume of trading activity. Bitcoin's response was closely tied to the prevailing narrative at the time. If the Fed's decision was perceived as dovish, suggesting that they would maintain an accommodative stance, Bitcoin might initially experience a boost. Investors often view Bitcoin as a hedge against excessive monetary expansion and inflation, and a dovish Fed could reinforce this narrative. On the other side, if the Federal Reserve's announcement leans toward a hawkish stance, signifying a resolve to tighten monetary policy and potentially raise interest rates, Bitcoin might encounter headwinds in the immediate aftermath. In such a scenario, investors could interpret the Fed's posture as a signal of confidence in the broader economic outlook. This shift in perception has the potential to trigger a ripple effect within the cryptocurrency ecosystem, prompting a reevaluation of investment strategies, especially in the short term. When the Federal Reserve leans toward a hawkish stance, signaling an intention to tighten monetary policy, it can introduce a sense of caution among crypto investors. This caution stems from the belief that a tighter monetary policy might indicate an imminent effort to rein in inflation and stabilize the broader economy. In this scenario, Bitcoin, often regarded as a risk-on asset with its unique blend of volatility and potential for substantial gains, might experience a temporary dip in demand. Investors could pivot their attention towards traditional assets such as bonds or equities. These traditional assets tend to become more appealing in an environment where interest rates are rising, as they can offer relatively higher yields and perceived stability compared to the relatively young and inherently volatile cryptocurrency market. As interest rates increase, the opportunity cost of holding cryptocurrencies, which are non-interest-bearing assets, could become more pronounced. This means that the appeal of assets that generate income, such as dividend-yielding stocks or interest-bearing bonds, may become more enticing to investors seeking consistent returns on their investments. Bitcoin's distinguished status as digital gold and a robust hedge against systemic economic risks remains not only intact but ever more resolute. Investors worldwide increasingly regard Bitcoin as a foundational, long-term store of value, particularly in the face of mounting concerns surrounding inflation and the persistent threat of currency devaluation. This enduring narrative, deeply embedded in the psyche of crypto enthusiasts, serves as the bedrock of Bitcoin's remarkable resiliency. The digital gold analogy carries profound weight. Just as physical gold has historically been sought after during times of economic uncertainty, Bitcoin, with its fixed supply of 21 million coins and decentralized nature, has emerged as the digital equivalent. Investors flock to Bitcoin as a refuge against the erosion of purchasing power caused by inflationary pressures, particularly in a world where central banks are increasingly injecting liquidity into the financial system. Bitcoin serves as a shield against the devaluation of fiat currencies, particularly in regions where political and economic instability looms large. In such cases, Bitcoin's borderless and censorship-resistant properties become invaluable, offering a means for individuals to safeguard their wealth and financial autonomy. The intrinsic appeal of Bitcoin as a hedge against systemic risks and a store of value has resonated not only with retail investors but also with institutions. The growing participation of institutional players, from publicly traded companies to asset management firms, has further solidified Bitcoin's position as a core component of modern diversified portfolios. However, it's important to remember that Bitcoin's narrative as digital gold and a hedge against inflation is rooted in its unique properties, particularly its capped supply of 21 million coins. These inherent characteristics provide a compelling case for Bitcoin's continued relevance as an inflation-resistant asset in the long run. Therefore, a hawkish Fed stance might introduce turbulence into the crypto market initially. If you found this video informative, please give it a thumbs up and share it with your fellow crypto enthusiasts. Thank you for joining us today, and remember to stay informed, stay curious, and keep hodling. Until next time.